Hello traders, it's Samurai Trader here. Welcome to session 140. In today's session you're going to watch me trade gold, the 6-tick Renko chart, and I had 3 out of 3, and I want to walk you through step by step the trades that I took, and we'll also be discussing, well, around that, talking about patterns, as trading truly is a pattern solving exercise. As always, I do need to pull up the disclaimer. There is a risk in trading. Don't trade with money you can't afford to lose. Very quick advertisement: if you haven't already downloaded my ebook, The Truth About Day Trading, please see the link below. Also, you can download my step-by-step training video and income Excel spreadsheet, quite a mouthful there, as I will show you how to estimate or guesstimate your trading potential, where you can be on a sensible basis, and I'll explain that in greater detail in a moment. As always, traders, my videos are raw, real, and unedited. And last of all, if you're a new or experienced trader, if you're looking at increasing your bottom line, if you want to learn some of the world's greatest day trading strategies, why don't you become a member? $297. You also get 1 month in my live trading room, all of my indicators. There's over 20 hours of recorded live trading sessions. It's massive. As some traders call it, they call it literally a gold mine, excuse the pun, because we are looking at gold today. As I mentioned, you also get 1 month or 8 live sessions in my coaching room, and 8 sessions in my live trading room. After month 1, if you wish, you can then continue those for $197 a month, and we have, I think it's 280 or I don't know, around 290 members, active members in the live trading room at the moment. Now let's get into this. Now, gold is a total different animal. For many years now, I've been tracking different markets, and I've been taking screenshots of which market to trade. That is, these are volume. When I say screenshots, this is the market analyzer, and I like to track the daily volume on the relevant markets that I either trade or that I'm interested in. Now, if we go back and stay with me, this is important, why gold seriously should be a market you should be considering now. In 21, we can see here we turned over 133,000 contracts. On the micro contract, gold 38,000. We fast forward to 2024, gold 165,000 contracts. The micro, where are you? 70,000. We jump ahead to early this year. This is the 6-month contract. Look at gold there, 348,000 contracts for the micro, and 236. Now this is then a little bit later, same set of figures there. Where are we? Gold here 350 on the micro, and up there 169. And I know that gold is at all-time highs, traders, but the trading is fantastic. That is, we're getting these fantastic swings, and that's what we look for when it comes to trading. Now, the downside is this: if you're going to trade it correctly, you need to be trading the right time frame. Now, going back last year, you could have easily been trading the 2-tick, that is the 2-tick Renko, or a much lower time frame. Why is that important, or why can that be important? It means you need less capital. But now, with the increased volatility, traders, we really need to be trading a higher time frame, larger candles. Otherwise, it's so easy to be whipsawed, and the market's moving that quickly, it's hard to keep up with it. Now, you can start, of course, with a micro with a lot less than $1,200. However, we never ever risk any more than 2%. So based upon this, and my recommendation of 2%, you can very comfortably trade the 6-tick, which is tradable probably a good 80 to 90% of the time. At times you'll need to still increase that to make it tradable. Now, during the Globex session, which I'm recording, this is 2:30 a.m. Central Standard Time. This is what is it now, 5:30 p.m. in my part of the world. The 6-tick generally you can romp in no problems, and even the New York afternoon, no problems most of the time. But this is the point I wanted to get across. If you start off with a 1200 account and you go for $60 a day, within 12 weeks you got the potential there. You've got your 12,000. Your account size hypothetically is up there at around 14,000. You're actually earning potentially $3,000 a week trading 10 contracts. Many traders would be happy with that alone. Now I'm going to show you how to do this, of course, in a moment. And to achieve that, 4 6-step scalps a day, and I'll show you what I mean by steps in a moment. So after commissions, I've rounded it up at $2 per micro. There's $64 after any, and this is assuming, of course, after any losses. Now then you roll over to the big contract. Within 8 weeks now you have the potential there of 10,000 a week income, trading just 4 contracts, 600 a day. So a micro contract is 10% of the value of a big contract. Okay, so this is how can I put it, this is extremely conservative, taking a really conservative approach. And by the way, with the compound table, and of course you can download this in the training video that goes with it, we only start adding another contract each time we double our money. So let's just say here we need $12,000 per contract. You don't start trading a second contract till your money doubles. So this is a realistic step-by-step plan that I teach traders. So let's now go to the recording, and we'll also review some charts as well. So let me play this for you to begin with. This is the trades that I took a few hours ago. This is at as you'll see down here in a moment, 8 p.m. Central Standard Time. It's now 2:30 a.m. And I'm trading the 6 tick. And I try, if the PowerPoint's out of view a little bit or a bit skew with, it's because I wanted to get as much of this screen in as possible. Now I'm going to walk you through what am I looking for. First of all, we can see I've got quite a steady uptrend here. I've gone long with a trend continuation setup. Up above we can see I'm trading 5 contracts. Now you'll see, for an example, on the 1 tick ES I trade 10 contracts, but I need a lot less capital per contract to trade. So the number of contracts really depends on the amount of capital. Number of contracts I trade depends on the amount of capital I need to utilize. Now up above you can see that pivot. This is how fast the market is moving. So it's moving on its own just here. This is exactly the speed, and bang, I went to get break even to lock some profit in case I bounced, and I went straight through the pivot. This become what we call a pivot magnet trade. I've now gone short here, and if I remember correctly, this is a double T3 it's called. You'll hear me talk about this regularly. Trading is nothing more than a pattern solving exercise, traders, and it's true. Everything I trade is based upon a pattern. Just there, I'm just looking at my higher time frame, and let me actually pause this for a moment. Let me just go back and explain this. I trade in the direction of a higher time frame, and for an example right here we've got a potential T10 setting up. This is a divergence trade, and so it's a 2DA, and I've got what's called a T3. It's a pattern. When you bounce off a pivot, you tend to find if you've got divergence and a pivot bounce, that dramatically improves the probability of your trade coming off. So patterns are very easy for us as humans to learn. We think in patterns. So everything I'm placing here is based upon a pattern. So let's continue with this. Okay, so just here we've come down, see my target down here, and now it's set up as a T10 on the entry chart as well. So for members watching this, a plain vanilla trend continuation up there, then we had a double T3, and we've got a T10 effectively if I wasn't already in that trade. Okay, so I'm looking at, okay, do I pull my stop down? So you'll sometimes see me fiddling around. There's no audio here. I just when I'm recording, I just want to focus. So you'll see me lift my stop up at times, but I never lift my stop beyond the original stop point. A fatal mistake that so many traders still make every day. They hope that price is going to pull back or go in the original direction, and they'll keep pulling their stop loss back, hoping, and of course they end up with massive losses. Okay, so just here I'm now looking, my target is well down here, and the reason my target's down here is based upon what's happening on the higher time frame. So I have what I call an entry chart, and I have what we call an anchor chart 1. I actually refer to an even higher time frame, but for newer traders you may find that a little challenging at first. But all you need to learn initially is how to trade your entry chart along with your anchor chart 1, and of course that's what the coaching classes are all about. So here I'm going to break even now, and the reason being, we come down, this is an 89 EMA. We tend to bounce off the 89 EMA every day, so hence I had a larger target. If we push through at the time, fantastic, and I think it actually continued to fall, but we bounce off it. Oh no, we did. So you can, I've actually paused the video in between shots here. Now this is another I think this is a T10, and we'll see at the end of the video what this was, because I'm not looking at the anchor chart 1. I think it was a T10 on the anchor chart 1. So here we tend to, when we break the 89, we tend to come down to this level, and my stop loss on this market is actually 24 ticks. Now that's $240 on the big contract, or $24, and bang, I hit the that's how fast that was, by the way. It just went down and hit it, bang. Now generally we will bounce. Now let me just stop this here for a moment. So that was all over in 8 minutes, and by the way, I was very happy to finish. Now I believe in finish trading. I believe in what I call POQ, the power of quitting. With the exception, I've just fired off a trade on the ES, which I'll show you in a moment, which once again was based upon a pattern, and I was targeting the pivot. I want to show you that. So that was 5 contracts. Now I have a methodology that I use in what's a sensible target per market. So here on the 6 tick 600 a day per contract, there I picked up 548, and in a moment you'll see some other patterns I want to explain to you. Now I want you to notice here, and remember, you'll hear me say regularly, follow the gold, by the way. So let's just see what I do here, and it's got another minute to go, but then I want to show you a video, just a very short one, of some setups straight after. Now I'd already hit my target, so I'm going to be pointing out where we would have put our trades in real time as I'm recording after this session. I'm just checking a fib bounce. That was a 61.8. That's more of an out of interest, by the way. I don't use fib levels as the final qualification of my trades. Now let me just pause this here right now. You had another potential setup right here, here, and here. What about there? If we had have bought there, you actually had an EMA bounce, but straight in front of you is the pivot. And that's where, when we're very close to a pivot, we've got to be careful, because it's like buying into a brick wall quite often. But notice the EMAs that I use, we bounce off them, and there's another T10 setup. Now let me now just pull up and show you here this video on patterns. So this is just a few minutes later. Okay, so that, I think we got down to there. I mentioned there was a T10 just here, and see that I'm just pointing that out just there. That's what we call a T3. It's a reversion to the mean setup, and so I'll mark that up. Unfortunately, it just took me a second. I thought I'll just record these patterns. I'm not trading those. I'd already hit my target just back here, but I just wanted to show you how many trading opportunities we had. You had one there, but into the pivot. Now you had one here into the pivot. It's very different. You've got trending EMAs, so you would have had a nice winner there, and a nice winner would have been here. Now where's my stop go, by the way? I like to place my stop one tick below. Now that's now a T10. You'll probably see I'm just pointing it out. Here is a trade entry, just pointing that out. Here's a potential trade entry if I was to take it. Now we still would have been in the T3, by the way, because for members watching it was a double T3. Okay, so here we're still in, and we're waiting, bang, and that's so what I'd actually done there is just pause the video. Okay, so we came down and you had another and for members watching, that was your first slingshot after a T10, by the way, down here, and you had another potential setup there, and see down here, here would be my target. So just watch what happens here. You had a plain vanilla entry just there, if you can see. I'm not sure if you can see my pointer just there, and now you've got another long trade just here. So remember, I'm pointing these out as they set up in real time. Just watch. I'm not sure how far that goes, but it actually bounces. It goes right up, and it ended up way up here somewhere. So traders, this is not rocket science. It's about trading patterns. Now there's some other considerations also. As we trade, we want to know where our pivots are, where the open, high, low, and close, where our major EMAs are. All of these plot automatically on the chart. So if you're using NinjaTrader, I've got all of these coded, and many other indicators, by the way. If you don't use NT8, I provide you with the indicator settings. I've got many TradeStation videos, indicators, by the way, so I give you all the settings. You can replicate everything that I do. Now let me just show you this pattern, this little trade I just had on the ES. Now I love the ES for scalping. Okay, so come and join me, but before you go, let me just flick over to another chart. Okay, so we're on the ES1 tick. Now gold, by the way, is $10 a tick. The micro contract is $1 a tick. On the ES, we're on the ES1 tick, and it's tradable probably 70% of the time, the 1 tick. I love the 1 tick. The next one's the 2 tick. I don't generally trade during the New York hours, where you'd have to quite often jump up there and do a 4 tick or a tick, an actual tick chart. But just here, I've just marked up all of the legitimate potential trades you just would have had. Here's the one I took. Now, what was I targeting? Remember on that slide I showed you a few minutes ago, I have a number of levels that I target. Up here was the current day's high, but if we look over here, we can see that there, and a number of times we'd gone up there and tested that high. Now I decided to then target that high, but to then front run. Now front running, traders, is where I get out 1 tick before that level, and if you see that there, it actually hit it, then it bounced. So I was out right up there at 888, just up there. Now if I had have missed that trade, you had another trade just there, and where have we gone price wise there? Now what I was about to say, if you had have taken that trade, when you buy into a pivot or sell into a pivot or the high of day, I want to get to break even, because quite often you'll then soon head for or to a reversal. Now the advantage of the ES contract is you can trade literally 100 contracts at a time. During the Globex session, your market depth on the bids and the sells are sort of generally 40-50 contracts at a time, but you've got no problems in, if you want to trade big. I generally will trade 10 lots on the 1 tick, and my target there is 200 a day up to 300 a day, just depending. So this trade here was up, I'm up 956.40 after commissions. Now just on other setups, we had a setup just there, by the way, and just here I would then be looking at the 2 tick. Okay, so here I'd look at the 2 tick, a higher time frame, And what am I looking for? Am I getting divergence now? And the answer is yes. So this is where now I want to really start avoiding long trades for the time being. Notice here I'm rolling over, I'm starting to head down. We want to start to look at this trade here and this one right here. Okay, now these once again are patterns. That is what we call a T10 on your anchor chart one, and this is a T10 on our entry, and for members watching it's also a T20-1. Now some of you watching may say, all of these codes, I'll never learn them. Traders, it ain't rocket science. There's basically 10 codes that we use, or 10 main setups, or terms I'll refer to. Actually, the setups you want to learn and master when you start trading are these ones, are your bounces. Now we qualify them. I'll then have counter trend trades that I'll take. These are trend followings, by the way, but you avoid all counter trend trades when you first start trading. All you need is these. Now you think 200 a day is not much. I want to show you one thing on this. Just one moment. This is where traders have got it so wrong. You don't go for the home run, traders. Just get on base. That's all you got to do. So here, to trade the ES, here I recommend you allow $4,000. You go for 200 a day. Now I know what some of you are thinking, Ray, I don't have 4,000. You start on the micro with 400 and go for 20 a day, but on $4,000 and just targeting 200 a day, within 12 weeks you're up to your 10 grand a week in your accounts now, and I have to say legally, potentially nearly $50,000. Do you know how many ticks that is? That's only 16 ticks a day. That's 16 of those a day. That's all we need after any losses. $200 a day, traders, as you can just saw, can make you very, very wealthy. Now if we were trading a higher time frame on the ES, say for an example the 2 tick where I need 6,250, I would be going for $325. I'd go for a larger target, but that's another story for another time. So traders, come and join me. You can see the link below. Let me teach you how to trade. You can trade gold, oil, the ES, the Nasdaq, the Dow, the Russell, all of these markets, and every setup that we trade is based upon a pattern. Thank you, traders. Come and join me, and I'll see you in the next video.